Good evening and welcome to the Accendo Traders Group. This is our daily stock market wrap-up for Thursday, December 3rd, 2009. The website is blogged at accendotraders.com. Effective video technical analysis trading plans delivered daily. We focus on trading plans that helps us stay ahead of the trade, lets us know what's coming down the pipe, what could affect our trades, stay focused and disciplined, thus cutting down our research time so that we can spend time with our family. So today, well, we had a rally at the open caused by a couple of things. That was caused by the dollar falling, but it did bounce back in the afternoon. Initial claims did more than expected, hitting a one-year low. But I really think the big news of the open was the Bank of America. Bank of America announced that it was going to repay the TARP and had plenty of money as far as liquidity. And of course, we know Bank of America is a part of banking, it's a part of financials. When the financials are up, typically the market is up with it. So that is definitely what caused the market to run up. We also had Fed Chairman Bernanke testifying in Congress, basically trying to save his job, talking about the economy and what they did in the past and what they need to do in the future regarding regulations. So we'll see how that goes. But the most important thing that was interesting was a sell-off into the close. Now, could that be about tomorrow's unemployment rate number and the non-farm payroll numbers? The government actually came out with an announcement saying that the numbers were good. So not sure about that, but that's kind of where I'm leaning, that maybe there's some knowledge about that. I remember a couple months ago, the government came out with some positive number information, and the next day the numbers were positive. But we'll look at that at the charts. Only 2 of the 10 charts were positive today. That was utilities and telecom, the only positive. And again, you can see we're down. But remember, at about 3 o'clock, we're only down 15. So going from 15 to down 86, certainly not a good close. No important earnings for today. And we had an upgrade on Comcast. Remember Comcast and GE, they're all getting ready to do this new NBC Universal. Obviously, Bank of America off of its news was upgraded in potash minerals. And we had a biotech Gen downgraded. Tomorrow, well, it's what we've been waiting for. We've been waiting for volatility. We've been waiting for panic. We've been waiting for the market to do something. So hopefully tomorrow's economic data before the market open will do that. Nothing on the earnings front and nothing on the split front. So let's go take a look at this end of the day close. So here we are with our overview. Here we are at FinViz, and we can basically see what? The rally, the push at the open, and then right here at this 3 o'clock, 3:30 time frame, we can see the push down into the close. And the funny thing is, you guys remember yesterday, what did I say? When's the last time we sold off in the afternoon? See, the power of Accendo deems it so. So we'll look more at this on the intraday chart, but you can definitely see, those of you guys know how much I believe in drawing some lines, and you can see some lines that if we would have broke, like the opening range low, those were certainly good indicators to go short when we break the opening range low. Now, some people use a 15-minute opening range, some people use a 30-minute, some people use a 60-minute. Whatever you define your opening range, that is certainly one indicator. Here we can see our decliners outpacing the advancers. Still have a lot of new highs, and we're still 50-50 on stocks above the 20 moving average. Oh, don't forget about our Rubik's Cube. Look how red it is. As we look at the market internals and look at what they're telling us, we can see a couple things. First of all, we actually see a green, which means we had an increase in volume. Now, you can see we don't have a lot of increases. We don't have a lot of red numbers. On the NASDAQ, though, we did have a lot of volume. So when we look at the daily chart, we'll see visually what this really means, 100% of yesterday's volume. But the other thing we see is the negative breadth. And again, a lot of that had to do with what happened in the close, as we just discussed. But the breadth is the measurement of the up volume divided by the down volume. How much buying compared to the selling. And so we had a pretty good bearish number there. Our advanced decliners kind of fall into place. We still have stocks making new highs. But we had a pretty big declining number. And again, a lot of it had to do with going to the close, and we'll see what tomorrow's number have for us as far as Fridays. So when we look at our daily charts, we can see this consolidation pattern. The Dow consolidation is much tighter. We're hanging around at the highs of the past 2 weeks, but we really need to push higher. And you can see at the open we pushed higher, and once again we failed. The sellers came and pushed us down, and at the end of the day really pushed us down. So again, our breakouts are above today's wick, above yesterday's wick. You want to put an alert there, and if it goes off, you want to consider going long. And then below about 10 to 50, below that, put an alert there. And if we go below there, we probably want to short it down to the 50 moving average. I guess that's below the 20, probably heading down to the 50 moving average. On the NASDAQ, we have a much longer range where we're talking about a 2-week range for the Dow. Look at this for the NASDAQ. We've been talking about this below 2025, above basically 2200, and we've been in this range now for going on 3 months: September, October, November, and now December. So September brought us into it, made a new swing high, and then here we are. So again, if we break the 20, we certainly can head down to the 50 again, but the NASDAQ's really been consolidating. Remember, we had some issues with Apple, and so some of our tech stocks are not leading us. We can see with the S&P, which same thing as the Dow, bringing us back down into the range. So again, we want to get above the wicks. Use today's wick as your alert, and use the 20 moving average, maybe even a little bit lower down here at, let's see here. There you go, 1,085 for your alert, 1,080 for your alert to the downside. Long term, we really don't see anything to worry about. We can see on the S&P we did break above the 500, but we still have plenty of room to get to the 100 moving average. And the Dow is above the 500, still plenty of time. And finally, the NASDAQ is also clearly above the 50 moving average. Also notice that the 100 has crossed over to above the 500 moving average. As we look at the intraday, of course, we have another great testimony to the usefulness of pivots. I'm using the Woody's pivots, and here we are, open, rallying up to resistance 1, sell off down to support 1, hanging out at the daily pivot for about 5 hours, about 10 o'clock all the way over here to 2 o'clock, 3 o'clock. And then using your intraday support line of about 10.425. That was certainly, once we broke that, an indicator to go short. Also using the open range. Here's an hour opening range. Right here is the half-hour opening range to consider going short. We are still talking about probabilities in our study for our educational portion of our video, Trading in the Zone, Mark Douglas. And again, understanding that as traders, we have to be confident in taking advantage of every opportunity. And so because of that, we have enough sample, enough trades to evaluate our system. So by knowing that, we can then not be too concerned about whether or not this trade is going to be successful or not, because we know over time, over enough trades, I will have more winning trades than losing trades. Once you've learned to think in probabilities, again, you're confident in your system. Again, you know that over time, my patterns, my system, my indicators will work out. And so this one trade does not ruin my system. Whereas so many new traders get so caught up in that one trade that their emotions blind them to what they know. And again, if you can't perceive that trade as being unique, then you're blinding yourself. You're blocking out the information that's telling you whether or not it's a bad trade or whether or not you need to get out. So again, the psychology of trading, trading in the zone, trading plans, all of these things that are the work of trading that often get overlooked are what separates the experienced making money traders and the new traders and the traders not making money. You guys know we have our Accendo Traders partners with 10-day trial access to a futures trading room. Great calls. Of course, we made money today. Easy to make money today when we finally had some trading minus the afternoon lull. And if you're going to trade futures, got a great broker for you. Intraday E-minis as low as $300. That is great leverage. You're not going to find anybody else as low as $300. I haven't found them yet. And if you sign up through us, you're going to get 20 free contracts. And finally, we have a futures trading plan. As again, for those of you who've been for a while know that I'm switching over from options and stocks over to futures. So I again want to make sure that you guys know how to be successful. Check out our website and on YouTube to learn how to get started trading futures. Get our podcast. And guys, I will see you next time.